Hi everyone, this is Karen and this is a video lecture on basic product costing concepts. Before we get started, let's think for a minute about the purposes of product costing. We've been talking a little bit about differences between financial and managerial accounting. And financial accounting, remember, is really focused on the external users of accounting information, so the shareholders and the potential lenders. And it really has a focus on the financial statements that those people use to make their decisions. And so product costing is important, obviously, for those people, and it's important in that it establishes the value for inventory on the balance sheet, and then also the cost of goods sold for the income statement. For management accounting purposes, however, we need cost information and good cost information for a variety of different decision-making purposes. We need good product costing information so that we can make good pricing decisions, good product line decisions, meaning what we want to sell and what we don't want to sell. We need good information so that we can manage and control and reduce the cost of our products. We also need good information with which to evaluate our managers, those managers that are responsible for controlling costs. And then finally, as we saw in our last class, the Forrest Gump case, we need good cost information, potentially for contracting with outside parties. So there's a variety of uses for cost information within a managerial accounting context. Remember in the first day of class, we talked about different ways to classify costs. And one way we talked about was the traceability of the cost to a cost object. Traceability means that some costs are easily and conveniently traced to a given cost object. In this case, we're going to be talking about a product. Other costs are not easily and conveniently traced. We call those indirect costs. We have three types of manufacturing costs. We have direct material, direct labor, and overhead. Direct material and direct labor are direct costs. Those are the costs of materials and labor that can be easily and conveniently traced to a given product. Overhead, those are all the other costs that go into making that product, but they cannot be easily and conveniently traced to a given product. So we call those overhead, and we're going to, instead of tracing those costs, we're going to have to allocate those costs. If you think about the overall process for establishing a product cost, we've got 7 different steps as pictured here. First of all, identify the cost object. In this case, the cost object is just a unit of product. The first step is to trace the direct cost, and that would be the direct materials and the direct labor, and that's actually the easy part. That's fairly easily done without much error. It's in the allocation of the overhead that it gets a little bit more complicated. The first thing you have to do, so this is step 3, is to collect all of your costs into one overhead cost pool. Then you have to decide how you're going to allocate those costs. What allocation base are you going to use? Now you might want to just take all of your overhead costs and spread them evenly over all of your products, giving every single product the exact same amount of overhead. On the other hand, and that would be perfectly fine to do, on the other hand, you might want to do something a little different. You might want to say, for example, that those products that consume more labor hours should get a greater proportion of the overhead cost, and those that consume relatively fewer labor hours should get a smaller proportion of the overhead cost. So that would be choosing labor hours as the allocation base. So there's a lot of different allocation bases you can use. You can use commonly used ones are labor hours, labor cost, materials cost, machine hours. Those are just some of the examples of the ways in which companies allocate overhead to the different products. Once you've chosen an allocation base, you compute the overhead rate that will be used to allocate overhead to the products throughout the year. This rate is computed at the beginning of the year, and it's based on budgeted amounts. So at the beginning of the year, you budget the total amount of overhead that you think you're going to have. You then also budget or estimate the total amount of your allocation base that you think you're going to have. So for example, you would estimate the total amount of labor hours that you would be using in the coming year. You take the budgeted overhead and divide by the allocation base, total amount of the allocation base, and that gives you a rate. It's called the overhead rate, or sometimes I refer to it as the POHR, the predetermined overhead rate, predetermined to indicate that it's done at the beginning of the year. So this will give you a rate, something like X amount of overhead dollars per labor hour, and that's the amount of overhead that will be applied to the cost objects based on their consumption of that allocation base, in this case, in my example, labor hours. Throughout the year then, as you finish products, you allocate overhead. So for every product, you're going to trace direct materials, you're going to trace direct labor, and then every product will get allocated its fair share of overhead as indicated by its consumption of the allocation base that you have chosen. So for example, you would take your overhead rate and you would multiply it by the quantity of labor hours that that given product consumed, and that would be the amount of overhead that that product would be allocated or applied. I use the word allocate and applied interchangeably. And those are the basic steps for allocating overhead to a cost object. Let's return for a second to this notion of the cost moving through the accounts. I stepped you through this the other day in class, so I wanted just to come back to it just for a moment. Recall that we have 3 different inventory accounts. This is where we record all of our product costs, all of our materials, labor, and overhead. Remember, these are inventory accounts on the balance sheet. Those costs flow through the accounts just as the product goes through the manufacturing process. So purchased materials, those costs get recorded in the raw materials account. And then as those materials are used, those would be the direct material costs. Those costs get transferred over to the work in process account. Direct labor, as it's used, gets also recorded in the work in process account. Overhead is also going to be collected into the work in process account. But again, overhead is allocated or applied. So we would also have an overhead account. And into this account, we would record the actual overhead incurred. That would be a debit to the overhead account. And then as products are completed, we apply the overhead or allocate a portion of that overhead to the individual products, recording that into the work in process account. All of these costs, material, labor, and overhead, are collected in the work in process account for an individual product. When that product is completed, those costs then get transferred over to the finished goods account, where it sits until that product is sold, and at which time those costs are transferred to the cost of goods sold account, which is an expense account, and those costs would show up on the income statement. Just a word about timing. Again, the overhead rate is computed as of the beginning of the year. It's based on the budget. And then the overhead is allocated or applied to the various products throughout the year using that predetermined overhead rate. At the end of the year, you would see what your actual overhead was, because remember, the overhead rate was computed based on budgeted or expected overhead. At the end of the year, you would know exactly what your overhead was. There oftentimes is a difference between what the actual overhead was and what you budgeted, and we would end up in a situation with over or under applied overhead because of that. So why is this important? Well, first of all, allocating overhead to products is required by GAAP. That is to say that GAAP requires cost of goods sold on the income statement and inventory on the balance sheet to have an allocated portion of overhead. Absorption costing means that products are absorbing a portion of the overhead. Overhead application is also a really important concept because in today's manufacturing environment, overhead is a huge proportion of product costs. And allocating overhead to our products ensures that prices cover all the manufacturing costs. For us to be profitable, we have to cover the cost not only of direct materials and direct labor, but also of all the overhead costs that we incur in order to manufacture our products. Allocating overhead also facilitates cost awareness and cost control on the part of the managers, and it helps mitigate the abuse of resources. But at the end of the day, the allocation of overhead to a given product is still an estimate. It's an estimate because we can't know for certain the exact quantity of resources that are being consumed by a given product. The overhead allocation is a simplification process that's going to allocate a portion of overhead to every given product. Remember, as we talked about in last class, we never truly know the exact cost or the economic cost of a product, or of any cost object for that matter. Again, we have this notion of economic reality of what our costs are, what the resources are being consumed to generate or to produce a product. And then we have the costs that are recorded in the accounting system. The difference between these two could be bias, as we saw in the Forrest Gump case, or it could simply be measurement error. And what we're doing today in the coming classes is really going to be focused on mitigating the measurement error in our product costing system. When you're designing a product costing system, you have a couple of choices that you have to make. The first is, which costs are you going to treat as overhead? Remember, we talked about direct costs as being those easily and conveniently traced to a given product. So there's a judgment call there. Which costs do you feel are easily and conveniently traced to a given product? So there will be some times when it's very obvious. There will be other times when it's not so obvious, and there is a choice to be made about whether or not a particular cost should be treated as a direct cost and traced, or treated as an overhead and allocated along with all of the other overhead costs. Once you've decided which cost you're going to treat as overhead, the next big issue is how you're going to go about allocating that overhead. It turns out there's a lot of different ways we can do this. You have to choose, for example, what you're going to use as your allocation base. So as I alluded to a moment ago, are you going to use labor? Are you going to use labor cost? Are you going to use machine hours? Or are you going to use something else? You also have to decide if you're going to do this in a very simple one-stage system or a more sophisticated two-stage system. And this is basically a choice regarding the number of overhead rates that you're going to be using. And I'll be talking more about this in just a moment. As is everything we do in business, the sophistication of your costing system is a cost-benefit trade-off. So a more sophisticated system is going to be more costly to implement, more costly to maintain. And so you would only want to invest in that if the benefits of a more sophisticated system will outweigh the costs. The benefits arising from the potential reduction of the measurement error. And we'll be talking about when that cost-benefit is more or less likely to lead you down the path of a more or less sophisticated costing system. So let's think about the how part of allocating overhead. Let's assume we've already decided what items we're going to treat as overhead, and so now we need to think about how we're going to go about allocating that overhead. And the first thing we have to decide is what we're going to use as the allocation base. What are some of the options? As we've already mentioned, some of the options are direct labor, direct material, quantity or direct material cost, really most anything that you can think of that you can measure for all of your products. Anything that those products consume that you want to use as the basis by which you're going to apportion the overhead across those different products. In thinking about this and trying to make a choice of what you're going to use as the allocation base, we want to think about what the objective is of selecting allocation base. What we really want is we really want to be allocating overhead to a product in a manner that reflects that product's consumption of those overhead resources. So we want the allocation base to vary in a pattern that is most similar to the pattern with which overhead costs vary. So for example, if direct labor hours is closely correlated with the consumption of the overhead resources, then that would make direct labor hours a good candidate for being used as the allocation base. Ultimately, we want to allocate to each cost object an amount of overhead that reflects that cost object's consumption of resources. And we also need an allocation base that can be measured with accuracy and with reasonable cost. So there's that cost-benefit trade-off. So keep that in mind. The overriding objective here is to allocate overhead in a manner that reflects that cost object's consumption of those overhead resources. And if you're allocating an overhead in a manner that is not reflective of the consumption of those overhead resources by that cost object, therein lies the source of the measurement error. So we'll be trying to avoid that. As I said, we can have different levels of complexity in our product costing system. Let's start with the simplest, a single overhead rate and what we would call a plant-wide overhead rate. That's where all of the overhead is going to be allocated to the products using one overhead rate. You think about this pictorially. You think about the product, the cost object there at the bottom. All the direct material is going to be traced. All the direct labor is going to be traced to that product. Again, that's the easy part. In a single stage, one-stage cost allocation system, we have one overhead cost pool, and all the overhead in that cost pool is allocated down to the product using one overhead rate. I refer to this as the peanut butter spread because it's a fairly naive way of doing things. And it's kind of like just taking all of your overhead and peanut butter spreading it across all of your different products. This is, by the way, a very common way of actually doing overhead allocations within industry even today, despite some of the issues that we're going to see later on. Let's focus on this. Let's think about how a simple overhead allocation system would work, a single-stage overhead allocation system. Let's assume for a moment that we've got a company that has two different products, a product called the basic unit and a product called the dominator unit. This is actually from a problem out of your textbook, one of the suggested problems. I've given you information here about the units of each type of product that are produced, about the machine hours that are consumed by each of those product lines in total for the year, the labor hours that are consumed by those two different product lines in total for the year, the materials cost, the direct labor cost, and then you also see in blue the total manufacturing overhead that is incurred throughout the year. So our total cost for the entire year, total manufacturing costs are $287,850. Of course, the $13,715 of direct materials and then $100,000 of direct labor, those costs would be easily and conveniently traced to the individual product lines and the individual products within those product lines. It's the overhead that we need to be concerned about. How will we apportion the overhead across the two different product lines? Let's assume for a minute that we're going to allocate overhead based on direct labor hours, that we've chosen direct labor hours to be our allocation base. We would compute at the beginning of the year an overhead rate using direct labor hours as the denominator in our computation. So the overhead rate would be taking the total overhead, the 174,100, and divide it by the total direct labor hours for the entire year, which is 5,000 hours. This gives us a rate of $34.82. So our POHR, that's our predetermined overhead rate, it's also, you can think of it as a plant-wide overhead rate, is $34.82 per direct labor hour. So for every product that we make, we will allocate to that product $34.82 for each labor hour that that product consumes. So if one product consumes 1 labor hour, it will get allocated $34.82 of overhead. If another product consumes 2 direct labor hours, it will get allocated $34.82 times 2 in overhead. So for example, how much overhead would be allocated to an individual unit of our basic product line? The overhead rate is $34.82. Let's multiply that by 3,000 direct labor hours. That gives us the total amount of overhead to be allocated to the entire basic product line for the entire year. And then I simply have divided by 1,000 to convert it to a per unit basis. So each unit of our basic product would be allocated $104.46 of overhead. What if instead we decide to allocate overhead based on direct labor cost? So not direct labor hour, but direct labor cost. So instead, at the beginning of the year, we would take our $174,000 of overhead and we would divide by $100,000 of overhead cost. This gives us a 1.741 rate. So we can think of this as every dollar of labor that a product consumes, it would also be allocated $1.74 of overhead. Whenever you have overhead being allocated using an allocation base that's denominated in dollars, in this case direct labor dollars, notice you have dollars being divided by dollars. So sometimes you'll see this written as a percentage, 174%, which of course is the same thing as 1.74. But you might see it written as a percentage. So if an overhead allocation rate is 174% of labor costs, that means that whatever your labor costs are, you will take 174% of that, and that will be the amount of overhead that is being allocated. In this example, how much overhead would be allocated to 1 unit of our basic product line? Our basic product line consumes $64,500 in labor cost. We would multiply that by our overhead rate of 1.74. That would tell us how much total overhead is being allocated to that entire line for the entire year. And then to convert it to a per unit basis, we would divide by 1,000 units. And in this case, we would be allocating $112.29 of overhead to every single unit of our basic product line. Let's do one last one. Let's suppose we're going to allocate overhead based on machine hours. So our basic product line consumes 4,000 machine hours for the year. So we would take our 174,000, divide by 6,000 machine hours, and we get a rate $29.02. So our predetermined overhead rate is $29.02 per machine hour. If this were the allocation base, how much overhead would be allocated to every single unit of our basic product line? Take the $29.02 overhead rate, multiply it by the 4,000 machine hours that product line consumes, divide by 1,000 to convert it to per unit. Every single unit of our basic product line would be allocated $116.07 of overhead. So here's a summary table showing what the total costs are under the different cost accounting systems. The first system, we allocated overhead based on direct labor hours. The total cost of our product would be $179. That's $10 for direct material. That's just traced to that product. And where did that come from? Well, our direct material costs are $10,000 in total for the year, and we make we make 1,000 units in a year, so that's $10 per unit. Similarly, we can convert the direct labor cost we have up above, divide that by 1,000, and we know that direct labor cost per unit is $64.50. As we saw a moment ago, the overhead allocated when direct labor hours are used as the allocation base totals $104.46 for a total cost under this cost allocation system of $179. When we use direct labor cost as our overhead allocation base, we allocated $112.29 of overhead to each unit of our basic product line. Notice the direct materials and direct labor are exactly the same regardless of how we're allocating overhead. And that, of course, makes sense because these costs are being traced, and so that won't vary depending on how we're allocating overhead. When direct labor cost is our overhead allocation basis, our total product cost for one unit of our basic product line is $187. And then finally, when machine hours are being used as the allocation base, our total product cost is $191. I think you can now see what I mean when I say that we can only estimate product cost, because here we've come up with 3 different total product costs depending on how we've chosen to allocate our overhead. So which one is better? That's the big question. Which one is more accurate? Which one is most closest to the economic reality? Which one, another way of saying this is which one best reflects the true resources that are being consumed by each of our units of our basic product line? So this was an example of a single-stage cost allocation system. I may sometimes call it a plant-wide POHR, a plant-wide predetermined overhead rate. It's a very simple way of allocating costs. And when companies use this type of cost allocation system, the cost driver that they use is typically volume-based. It's typically something like I've been describing to you: direct labor hours, machine hours, direct labor cost. Those are very common allocation methods. And this type of allocation, as I mentioned earlier, is very commonly done in practice. But unfortunately, in some settings at least, it's going to lead to very distorted product costs. And we're going to be spending most of our time in the next couple of classes talking about the cost distortion. One way to mitigate some of this distortion is by increasing the complexity or the sophistication of our product costing system. So we can move slightly up the ladder of complexity or sophistication and go from a plant-wide overhead rate to a departmental overhead rate as a means of trying to get rid of some of the distortions that arise in a plant-wide overhead rate. Here's again the picture of our single-stage allocation system. That's a one-stage system because overhead is allocated just one time using one overhead rate. Compare that with a two-stage system. In a two-stage system, we allocate overhead in 2 steps. First, we take all of our overhead and we separate it into different departments. So for example, suppose we have a printing company and we have various departments such as the art room, the make-ready room, the screen printing. We have one overhead cost pool. The first thing we're going to do is trace to the extent we can and or allocate these overhead costs to the different departments. Now, why did I say trace? I thought these were overhead costs that couldn't be traced. Well, remember, they can't be easily and conveniently traced to a single product, but they might be able to be easily traced to a department. And so where we can, we would trace overhead costs to a department. And even at this stage, we might need to be allocating because even at this stage, we can't be tracing to even a department. So that is the first stage of the cost allocation system. In the second stage, we then allocate overhead from each of our departments down to our product. So look at what's happening here. Now, instead of having one overhead rate, we have 6 overhead rates. We have a different overhead rate for each of our different departments. So the process of computing an overhead rate and then using that overhead rate to allocate overhead to individual products through the year, we would actually be doing that 6 times for every single product. Every single product would be allocated overhead from 6 different departments. Now, one of the benefits of doing that is that we can use a different allocation base for each of these departments. We can use an allocation base that makes sense for that department. Remember, our objective is to allocate overhead in a manner that reflects the consumption of resources. So maybe it makes sense for the art room and the make-ready room to use direct labor hours as the allocation base because those are heavy, labor-intensive departments. But for the cutting department, that's all automated. Maybe there's very little labor, and so direct labor hours is not a very good reflection of the consumption of the resources from the cutting department. So we would take the overhead associated with the cutting department and we would allocate it maybe instead based on machine hours. So in this way, we can do a better mapping of the overhead allocation to the consumption of those overhead resources by using different allocation bases in each of our different departments. All of this is in the name of trying to mitigate some of the measurement error. So this is a more sophisticated costing system. It's also a more costly costing system to implement and maintain. This is called a two-stage departmental costing system. As you'll see in the next class, we're going to go even one step further up our sophistication and costing system, and we're going to look at something called an activity-based costing system. An activity-based costing system is a two-stage costing system just like I described. However, in an activity-based costing system, in the first stage we allocate overhead not to different departments, but to different activity cost pools. So what is an activity cost pool? An activity is exactly what it sounds like. It's an actual activity. So inspection is an activity. Handling material is an activity. Purchasing is an activity. Now these may or may not map directly into different departments. You might have one department within your organization that carries out multiple activities, likely you do. You even potentially could have multiple departments engaging in one activity. The important point here is that we're first going to separate our cost into activity cost pools. So we're going to collect all the costs associated with a given activity. And then beyond that, it's pretty much the same as the two-stage departmental system that I just described. We have multiple activity cost pools, and we can allocate overhead from each of these activity cost pools down to our different products. And again, we can take advantage of the two-stage by using a different allocation base for each of these different activity cost pools. And again, we're going to choose an allocation base that makes sense for that activities. So for example, perhaps we want to allocate inspection costs down to our products based on the number of inspections that each product consumes. And maybe we want to allocate material handling overhead costs based on the number of material handling transactions that each product consumes. A product, for example, that has just a couple of components will have not very many material handling transactions. A very complex product that has many components will have quite a few material handling transactions. So again, this is a more sophisticated system and one that's going to hopefully help us better map the overhead allocation to the consumption of those overhead resources. An activity-based costing system is also important in that it recognizes something really fundamental and really important. It recognizes the fact that not all costs are driven by volume. Not all costs are driven by volume. Some costs reflect resources being consumed or activities that we're engaging in for every single unit. In other words, those are unit level activities. But there are other activities that are costly, other costly activities that we engage in not for every single unit, but for every batch of units. Those are batch level activities. There are other activities and costs associated with those activities that we engage in not with every unit and not even with every batch of units, but with every product line that we have. So those are product sustaining activities. An example of that would be engineering type activities that support an individual product line. And then finally, there's other costs and activities that are just there to support the entire production process. That's the facility level activity. So here we have the plant manager's salary and the depreciation on the factory. Remember on the first day of class, and we put up on the board the different types of costs associated with making wine? And I put them in different columns, and I didn't really explain why I was doing that. But what I was doing was separating all the different product costs into these different categories of the cost hierarchy. We call this the ABC cost hierarchy. So I had costs such as bottling and labeling and corking on the far left because those are unit level costs. And then I had costs associated with a barrel in the second column. So mixing, tasting, aging, the cost of the barrel itself. In the third column, I had costs associated with sustaining an entire product line. So in our example, that would be the cost of maintaining the vineyard itself, so the pruning and the picking and the sorting and the tasting. And then finally, we also had up on our board costs associated with things like the building and the fermentation tanks and the farming equipment. Those would be classified as facility sustaining costs. Those are costs just that we incur to sustain our entire operation, not just to sustain a particular vineyard, and certainly not just for a particular batch or single bottle of wine, but to sustain the entire operation. Finally, on the very far right, I had put period expenses. Those are not even product costs at all. Those are SG&A costs. Those are costs that are actually expensed as soon as they are incurred. So the four types of costs on the left, the unit, the batch, product sustaining, and facility sustaining, those are all product costs that are inventoried. And I grouped them here to reflect what drives those costs. Are they driven at the unit level, the batch level, product sustaining, or facility sustaining. So recall my 7 steps for product costing. In an activity-based costing system, you still trace direct materials and direct labor. That's no different under any costing system. That will always be done. You're still going to go through the process of allocating overhead. The only difference is you're allocating overhead based on activity consumption by the different products. So you're going to identify different activities and you're going to collect the cost for those activities. Those will become the activity cost pools. And then you'll also determine how many of each of those activities or transactions an individual product consumes, and then you'll use that as the basis by which to allocate overhead to those products based on the consumption of activities of those products. So it's a 2-stage system. It's a more sophisticated system, and it has a focus on activities that are going on within the production process. Can you guys hear my dogs? They're barking in the background. Sorry. Before I close, I just wanted to talk for a minute about how activity-based costing is used in the real world. Activity-based costing can be somewhat expensive to implement and also to maintain. We'll be talking more about that in class. Many firms adopt activity-based costing not as their ongoing costing system because it is more costly to implement and maintain, but they do it on a more one-time project basis. That is, they can use it offline. So a majority of companies that use activity-based costing will use it offline. That means it's not its primary costing system for generating its financial statements, for example. It could be. There's no reason why you couldn't use activity-based costing as your allocation method for generating cost of goods sold for your income statement and inventory for your balance sheet. But the majority of companies don't do that. They use the simple peanut butter spread approach for doing their financial statements. And they use activity-based costing system or activity-based costing as a project. So I've given you some statistics here from a survey that says 40% of companies using activity-based costing do so quarterly, 18% yearly, etc. According to surveys, the primary objective of using activity-based costing, most companies report that it is for product and service costing. And again, it's not for necessarily recording cost of goods sold on the income statement or inventory on the balance sheet, but it's product and service costing for purposes of making decisions, making real management decisions such as pricing. So they need to know what the product cost is or the service cost is in order to do pricing. 51% of the companies also report using activity-based costing as a means of doing process analysis. We're going to be seeing in upcoming classes how activity-based costing has been used very successfully by many companies to improve their actual production process. And then 49% say they actually use activity-based costing just for performance management more generally. A lot of companies that you are very familiar with use activity-based costing. I just have a few here. We're going to be looking at a company called Sanic. We're going to be talking about John Deere. And of course, we'll be starting next class with our case, which is a company called Destin Brass. If you look at the usage rates of activity-based costing, turns out that 20% of the companies that use activity-based costing are in the manufacturing setting. That's where activity-based costing was initially developed and initially used, but it's sort of interesting that now it's moved beyond that setting. 20% of those companies using activity-based costing are service companies, and interestingly, 40% of organizations using activity-based costing are public sector. If you look at overall adoption rates, though, across the globe, they're somewhat low. So according to this survey, and I actually think this is a little bit low, but according to this survey, 31% of the respondents to this survey are using activity-based costing or activity-based management more generally. So that's a bit low, given the benefits that we're going to be talking about to activity-based costing. In this survey, they also asked about satisfaction rates for activity-based costing. And again, it's just slightly below the mean in terms of satisfaction. So that's kind of perplexing. So if activity-based costing is so great, and I'm going to be talking to you about the benefits of activity-based costing in quite a bit of detail over the coming classes, why aren't more people using it? Behavioral and organizational resistance. When you apply activity-based costing, you tend to find out that products you thought were really profitable aren't really very profitable, or customers that you thought were really good customers are really unprofitable customers for you. And of course, that's going to create some political resistance within the organization as managers who are heavily involved in a given product or a given customer find out that their product or their customer is not profitable as they thought. So that's going to create some organizational resistance. Some people argue that activity-based costing actually introduces measurement error because we're having to measure not just, not having to compute not just one overhead rate, but many overhead rates. They would also argue that maybe that leaves more room for management manipulation. I find this criticism a bit weak, and I think that, as you'll be seeing, that on balance, activity-based costing has a greater opportunity to decrease measurement error. I think the biggest reason that more companies don't use activity-based costing is that it can be expensive. Initial measurements to implement the system are expensive. The ongoing maintenance and expanding to other parts of the organization, the increased complexity. It's an expensive system to implement and to maintain. So we're going to be talking a lot about when it makes sense to implement an activity-based costing system. So a good portion of those companies that are not using activity-based costing may very well be settings where it makes sense to not use activity-based costing. So we'll be talking about when that is. Takeaways from this lecture. First of all, costs flow through the accounts as the product goes through the manufacturing process. We've seen that a couple times now. Direct material and direct labor, those are direct costs. We trace those costs to the product. Very little, if any, measurement error in that process. The measurement error and the challenge comes in the application or the application of overhead or the allocation of overhead. So manufacturing overhead is applied or allocated to the product using overhead rate. Product costing issues to address when you're designing a product costing system. First of all, you have a choice of what you're going to treat as overhead and allocate to the products versus what you're going to try to trace. That's usually a fairly easy decision. The big decision is how you're going to go about allocating overhead. You have to choose how many overhead cost pools you're going to use. Are you going to have a very simple single-stage plant-wide overhead rate, in which case you're only going to have one cost pool and one overhead rate? Or are you going to have a more sophisticated system, a two-stage system, where you have multiple cost pools and then you have multiple overhead allocation rates? Regardless, you have to choose what you're going to use as your allocation base. You have to decide what you're going to use to allocate from your cost pool down to your products. And again, remember, the objective here is to choose an allocation base that's going to allocate overhead in a manner that reflects that product's consumption of those overhead resources. Activity-based costing, you're going to see in coming classes, can significantly improve cost information. However, the implementation of activity-based costing can be costly. More contemporary methods that we're going to talk about in the next class have helped to alleviate some of the cost of implementing and maintaining an activity-based costing system. So that concludes this lecture. Please let me know if you have any questions, and I will see you in class.